Welcome very cordially at this conference on the presentation of LPP results for the second quarter 2017. In the screen you can see the face of Kate Moss. Kate Moss will be the star at the opening of our flagship shop Reserved in London as early as next week. At the same time, she will be the face of our entire autumn and winter campaign for the Reserved brand. We will tell you a bit more about the London events. Now let's move on to the financial results for the second quarter. At the end of the second quarter, we had more than 1,700 shops operating in 19 countries. Comparable sales, that is in brick and mortar shops, grew by 5.5%, and e-commerce doubled in that period. So we increased our sales by 15% and we developed 3 billion PLN in revenues. Please have a look at a map. You will recall that for quite a long time we had a wide gap to the east of Poland, that is Belarusia, in which in the second quarter we opened our first points of sale. As a result, this map looks quite complete on the eastern side. New shops in Belarus, another 19th market, but also in Russia we exceeded the threshold of 300 POSs, and it is also a market where we are developing dynamically. Also in the Baltic countries we opened our e-commerce online shops in the past quarter. The fastest growth was recorded in Sinsay brand, that is our youngest brand, but also the number of POSs of our flagship brand Reserved are growing quite fast. A bit more about our sales. On the left-hand side you can see a graph with like-for-like sales numbers. We have a subsequent quarter of like-for-like results. These are only brick and mortar points of sale. We are very happy that apart from the house brand, all the other brands had positive results on like-for-like. At the same time, all countries had positive results on like-for-like in the second quarter. Internet sales, online sales are shown in the graph on the right-hand side. You can see that the figures doubled. Now, for the second quarter, we had 5% of the total sales of the group. That is the percentage for which this market accounts. And if we look at Poland, where the online shops have been opened for the longest time, as much as 7% comes from e-commerce. It is important to know that e-commerce is growing not only because we're adding new markets, although obviously it is a major contributor to the total sales, but also we have significant growth numbers in our stable markets, and that is by more than 70%. Please have a look at the breakdown of our sales by brands. In Sinsay, Mojito and Reserved, the results are particularly good. You can see that Mojito seems to have established itself as number 3 in the ranking. Very good results of this brand make it significantly up as compared with House. The brand House had a weaker spring and summer season. The collection somehow did not appeal to the tastes of our clients, but usually this brand is strong in autumn and winter. In particular, winter jackets are popular, so we hope that this year it will also record a success. And sales by region. The greatest growth in sales in the European Union without Poland. We had opening of 3 shops in Germany, but also other regions, in particular the south of Europe, have very high sales. The Czech Republic, Slovakia, Romania, Bulgaria, Croatia, very good results in our shops. On the left-hand side in the table you can see that the area in the EU without Poland and in the CIS area are comparable, 216 square meters in each of those regions. Now the area grew 7% year to year. But our plans for this year were structured in such a manner that most new openings will be accumulated in the fourth quarter. So the fourth quarter will be the time where we expect to see a major acceleration in new openings. Let's have a look at our global sales. 13.5% sales in the second quarter alone. The graph on the left-hand side shows this navy blue bar at the top. This is the growth. This navy blue bar is e-commerce growth that grows quarter to quarter. On the right-hand side in the table, you can see sales per square meter. We are very happy to see this number growing. In particular, the dynamic growth is recorded in the European Union, outside Poland and to the east of Poland, Russia, Ukraine and Belarus. We are waiting until sales per square meter in the regions outside Poland catch up with the numbers we see in Poland. Commercial margins. Starting from the second half of next year, we have had a new policy for managing our stock. In regular months, we sell our stock at full price, very reluctantly granting any discounts. It is a time where we are fighting hard to get a good margin. While in sales seasons, as is the case in July or August, we are selling out past collections, and this is the time where we try to sell as much of stock at POSs because it is the most efficient way of getting rid of stock, also in order to avoid extra logistical costs. On the left-hand side, you can see in the graph that in the analyzed period we have record high commercial margins, 56.5%. So this policy works out and we will continue it because we are satisfied with how it works. Additionally, and that's something we expect to see more in the following quarters, you can see the graph showing how the US dollar to PLN exchange rate develops. Weaker dollar is likely to have a positive impact on our results. Now, costs. You can see the costs of our own company shops. In the green part of the bars, you can see rent per square meter. In the middle, in gray, the costs of our staff. And at the top of the bar, you can see the remaining costs, that is depreciation, utilities, power supply, and so on. You can see that the rents dropped slightly as compared with the second quarter, and this was also thanks to the beneficial development in the euro to PLN exchange rate, but also all agreements that we sign are signed on better, more favorable conditions for us. Cost of personnel, 1 PLN lower than the first quarter. We are better and better at managing our personnel in the sense that we have a new system for developing work schedules. Those work schedules are thus adjusted to the traffic or to the number of customers visiting a particular point of sale at a particular time of the day. So by managing better our work time, we optimize costs of labor. And the remaining costs have remained stable for the last 3 quarters. We had 5% growth in our POS costs by square meter. And now you can see the total costs. Here the growth was by 7%, so you can see that the cost of the head office are growing faster, that's true, but we have major investments in product development, in IT and in commerce departments. We continue to hire new staff in order to make sure that the e-commerce sector grows very fast. Okay, I've talked about sales, margin and costs, so it's the right time to present the results of the second quarter. Very good results. We are really happy with them. Please look at sales, which grew by almost 14%, and at the same rate growth was seen in costs. I would like to show you the leverage, how efficient it is in our company. If we have a similar growth of costs and of sales, and improvement in gross margin translates directly into EBIT. So you can see that in the second quarter we improved our commercial margin by 6 percentage points. Those 6 percentage points also improved our operating profit margin. We developed more than 200 million operating profit, and we generated more than 170 million net profit. Let me just remind you that this quarter we generated as much net profit as in the entire 2016. So indeed the second quarter was very positive, and as a result we were able to cover the loss from the first quarter. Year to date we have almost 100 million operating profit and twice as much net profit as a year ago. A few words about our stock. Stock was at 1,604 PLN per square meter. That is slightly more than we expected, because we expected 1,500 per square meter. However, this results from the fact that this time we brought to our warehouse part of autumn collection earlier than we did last year. We wanted to have it in time for the season, so this was as part of our adjustment of stock management policy. So we brought this stock earlier, but yet we are at a safe level in terms of stock. On the left-hand side of the screen you can see working capital. That is the difference between our liabilities and stock. As I said at previous conferences, our current targets are to equalize liabilities with stock, that is to release the cash that we now have in working capital. In the last year, if we compare the second quarter this year with the second quarter last year, we released almost 400 million from our working capital by extending terms of payment and by increasing liabilities. Here on the left hand side of the screen you can see a graph showing net debt. For a long time this net debt fluctuated between 600 to 800 million PLN. Now instead of net debt we have net cash. So thanks to cash flows from the working capital on the one hand, and on the other hand thanks to the good results from the second quarter, we were able to generate so much positive cash flow that we were able to repay most of our bank debt. Now the company is very stable, very safe financially, and as a result we can look at the future more boldly. On the right-hand side you can see a graph with capital expenditures, almost 90 million PLN capex, which is similar to what we had last year. And year to date, for the first half of the year, 200 million PLN have already been invested in particular the development of POSs, which is more than half of what we planned for the entire 2017. Summing up the entire first half of the year, I should say that we recorded a very dynamic growth in online sales. We will continue to invest in this segment of our business because it is indeed very promising. It has good prospects. We opened our 19th market, that was Belarus. We have a significant improvement in gross margin thanks to new collections and a new stock management policy, and we continue to improve our working capital, as a result of which we are able to reduce our debt. Now, a few key events from the past quarter, the second quarter. The first, shops in Belarus with 3 brands, Krog, House and our flagship brand Reserved in Minsk shopping center. Then we opened online shops in Baltic countries, Lithuania, Latvia and Estonia. All brands are already available online in those countries. Another element was an agreement with Arvato. In a moment I will tell you more about that. Just to signal the background, Arvato is a logistic operator for e-commerce, so we took advantage of the situation in order to improve the logistics of our e-commerce operations and also to ensure for ourselves the possibility for growth in this segment. Another important event is that we are building a network of flagship shops in major cities in order to increase the awareness of our principal brand. We want the Reserved brand to become a global brand soon. In May, we opened flagship shop in Berlin at the main shopping street in the city. A few words about the agreement with Arvato. Arvato is an operator specialized in e-commerce. many global players use the services of this particular company to support them in e-commerce, packing, sending, shipping clothes, and handling returns. So this is a German company with extensive experience. We have in LPP extensive experience in logistics support for brick and mortar shops, and Arvato has comparable experience in e-commerce. So we decided to draw on their experience. Their warehouses are situated in the center of Poland, which is of major importance because as a result we are able to accelerate the time of delivery of goods to the customers. In the fourth quarter we will start the actual cooperation with this company. 4 brands will have their warehouses there. The first warehouse is 30,000 square meters. Let me remind you that our first warehouse in Pruszcz Gdański had a comparable area. So you can see that this is a major, large warehouse which allows us to increase our shipments in e-commerce. Additionally, this provides us with the option to double this space if needed, and we hope it will be needed. Now, a few words about Germany. Berlin was our 19th shop. Next year we are opening another shop in Frankfurt. That will be our 20th POS in that country. According to our plans, at number 20 we will stop our development of POSs in Germany until we've reached a break-even point. Then we might consider expanding the network. This is our 4th market in terms of sales, and we will open our flagship shop at Oxford Street in London. Kate Moss will be our star who will advertise us for this opening. This shop at Oxford Street is probably the key element in building the image of the brand as a global brand. There is no better shopping street than Oxford Street in London. 250 million people go along the street every year. We are visited by 500 million people in our LPP shops, but I'm talking about people who actually visit shops, and here I'm talking about a street which is crossed by 250 million people. It is not only Londoners, UK citizens, but it is a street popular with tourists from all around the world. London is #1 destination for tourists in Europe, so those people seeing our shop there will recognize Reserved as a global brand. Let me move on to our plans for 2017. We are planning to increase our sales area by slightly less than what we announced at the previous conference. However, this slightly lower pace of increasing our sales area results from the fact that we have very tough negotiations now on the conditions of new shops. So unless we get as good conditions as the best global players, we often give up the idea of signing an agreement with a particular shopping center. So sometimes we give up contact with a particular shopping center, but we do that in order to improve our standing in general, and all that is with faster development of our network in Russia and Belarus. The greatest growth was recorded in CSA, and that is closely followed by Reserved. This year we have already opened 2 new markets, Belarusian market in the second quarter and the Serbian market 2 weeks ago. We opened the first Reserved shops in Serbia 2 weeks ago. The UK will be our 3rd market, and at the end of the year we are planning to enter into Kazakhstan. CapEx will be at 375 million this year, out of which most for POSs. E-commerce, a very important segment in our plans. By the end of next year, that is by the end of 2018, we want to hire as many as 500 new people for IT positions in order to develop e-commerce segment. Now our online shops operate in 9 countries, and for the second half of the year we plan our online shops for all brands in Russia, Ukraine, and obviously in the UK, along with the opening of our flagship shop at Oxford Street. And a few words about hedging. Until now, the company has not actually been involved in any sort of hedging activity. Since the end of the second quarter, we have started using hedging. Why are we doing this? In order to mitigate exchange rate differences that are below EBIT line in our financial activity. There are 2 areas where differences occur on exchange rates. One is the settlements within the group. The parent company sells to its subsidiaries, and normally liabilities are local currencies, so depending on the currency exposure, the impact of exchange rate differences can be greater or smaller. In hryvnia, the impact was particularly visible in the recent period. We converted some of our liabilities into equity of subsidiaries, and also the good financial standing of the companies allowed us to repay a considerable portion of all the debt. So historically speaking, back in 2014, the liabilities, receivables and payables within the group were at 800 million. Now we are at less than 100 million. So the exposure to the potential impact of exchange rate risk was reduced very significantly. Another area of impact is liabilities in dollars. The company tends to extend the terms of payment to its suppliers, but the risk increases as a result. So we decided to hedge our dollar transactions. From the moment of receiving the invoice until the moment of actual payment of the invoice, we have forward hedging for those liabilities in order to mitigate exchange rate differences. But let me reiterate, this hedging does not influence in any way our gross margin. Gross margin results from the US exchange rate as on the date of posting the invoice in our books of account. We hedge only the period between posting the invoice and the actual payment. You often ask us what LPP is going to do with the cash generated. The answer is we are going to invest a lot in the infrastructure. On the one hand, that will be logistical infrastructure. On the other hand, that will be office infrastructure. Our logistical center in Pruszcz is sufficient to service our sales until 2020. But that means that as early as now, we need to start thinking about what will happen beyond that time horizon, beyond 2020. This is why we decided to build another logistical center, and now we are working on deciding where exactly it will be located. We would like it to be situated somewhere in the northern Poland, close to main roads, close to motorways. We do not know exactly. Most capital expenditures related to that will be incurred in 2019 and 2020. On the other hand, we have significant development of our business in the headquarters. We have e-commerce, we have IT, we have product development departments, and that means that we have more requirement for office space. In Gdańsk, at Łąkowa Street, we bought a new plot of land, and we are planning to have 4 new office buildings constructed there. We have already started the construction of the first of them, and we expect to be able to move into this first building at the beginning of 2019. and the amount of about 90 million PLN will be spent on this building. To sum up, our expectations for the entire 2017 are the following. We uphold our goal that our sales should grow faster than commercial area, so positive like-for-like. Then positive and continuous improvement of margins, commercial margin. We expect it to be at about 53%, and we intend to keep our debt at low level. Opportunities include online sales development, entering into new markets, and continued very dynamic development of the existing points of sales. Better collections, nicer collections, popular with customers, and that obviously increases sales and improves like-for-like. Also, the cheap American dollar now helps us. The exchange rate is a positive influence. As for risks, there are works on a ban of trade on Sundays, so we do not know how the situation will develop, so that is a potential risk. Every 2 years, we organize an event called Investors' Day. 2 years ago, you were able to see our main office after its complete reconstruction, and we also showed you our new logistical center. This year, we would like to invite you to London. On the 22nd September, you will be able to meet there Mark Piechocki, president of our management board, who will tell you more about our plans for the upcoming 2 years, but also about our vision for development in long term. Additionally, we obviously also invite you to visit our shop at Oxford Street. So please be invited to our Investors' Day on 22nd September in London. That brings me to the end of the presentation. Thank you very much for the presentation. And I will be very happy to answer your questions. Just make sure that you ask your questions, speaking to the microphone, so that online listeners can hear us. I knew there would be questions. Raiffeisen, I would like to congratulate you on your results. And I have a question related to that. You have cash, and the requirement was down by 400 million. You signaled that the logistical center would be 300 million for 2-3 years, the head office 90 million, so that is already paid for. What is your thinking then? What will you spend the remaining cash on? So what you are saying is that we had good cash flow, good release of cash from working capital, so we have basically financed our new investments. Yes, simplifying, that's it. For me as a financial director, it's very comfortable to have a lot of cash. Frankly speaking, we do not have a ready plan how we are going to use this cash. That situation is extremely comfortable for us, but it is relatively new. So we want to wait and see for 2 more quarters to check whether this situation can be sustained, whether we can continue to have it on our balance sheet. As of today, I cannot answer the question what we are going to do with our excess cash. And what about buying your own shares? As of now, you do not exclude that possibility. As of now, we do not want to exclude anything. We simply do not have any decisions made on that matter. Okay, another question then. Recently, a lot of companies have been reporting that Treasury or tax offices in particular, were inspecting them or were planning to inspect them. Are you among the companies to be inspected? Yes, we are among the companies that are inspected by tax and Treasury authorities, but this is not about VAT, but income tax. We are now under the procedure. Okay, thank you very much. Any other questions? Maria Mickiewicz, PKO. I have a question about the German market, because as you have mentioned, with 20 shops you are going to wait with any further development of the network until you reach a break-even point. So my question is about the second quarter. Sales in Germany was good per square meter. That was a two-digit growth year on year. Was it a one-off event, or is something positive changing in this German market structurally? Yes, that is a structural change. The longer we are in this market, the better is the awareness of our brand, and the more customers visit our shops. If you look at the dynamics in Germany, we need more customers who actually enter the shops. If we compare the number of customers visiting shops that are adjacent to our shops, we see there is more traffic, and if we increase the traffic, we will be able to improve the results. But we have already recorded the first results. The perception of the new collection was good. I'm talking about the collection from spring and summer. We also see positive signals for the autumn and winter collection, which means that we are moving in a good direction. We need to improve the brand awareness, but please bear in mind that we have been in the market in Germany for quite a short time. Only the first shop we opened there has been operating for about 3 years. Subsequent openings were recent, so we need more time to let ourselves be known by the customers. Tomek Sokołowski, BWBK. Can you tell me about year-on-year results in Germany, EBITDA operating result? I can tell you that the result is still negative, and it is similar as it was last year. We think it is a positive development. Increasing sales in those shops should improve our results for the following quarters. Any further questions? Marek Aviva Investors. I have a question about reserved shops, about the sales structure there in terms of men's, women's, and children's collections, because I have noticed that in some locations there was a significant decrease in the men's collection. Is it a temporary development? Are you testing it in some locations, or is it a lasting change which should improve your sales per square meter? I'm very happy you have noticed this. That means you are our customer. That's great. I do not confirm this. I can comment on this in the following way. We can see that women's collections, unfortunately for men, sells much better than the collections for men, which means men seem to buy less than they did a few years ago. Therefore, we need more space for the collection for women, because this collection sells very well. We see that women buy more, so we provide more models, and for that we need more sales space. And that is partially at the expense of the area that was used for men's collection, but that is done in order to improve efficiency and improve sales. And we know that if a woman comes to a POS, she's not an egoist. She buys something for herself, for her child, and sometimes for her husband. So we do encourage ladies to visit our shops. Michał Majewski, Allianz. I have a question about these plans, those plans of dynamic development of online sales. You informed that you wanted to hire 500 programmers, IT specialists. My first question is about the salary, and the second is about availability of such specialists. How many of those specialists have you managed to recruit so far? And another question is about a comparison between profitability of online and brick-and-mortar shops. Probably you are right in observing that it is difficult to recruit IT specialists, because there are few available people like that in the market, but we are gradually hiring such people. It is strategically important for us to enhance our e-commerce segment. We want to have fast growth here. Let me remind you that we are doubling our sales in this distribution channel year on year. We are adding new countries, we are entering new markets. We are planning also to enter those markets where, as of today, there are no brick-and-mortar shops. We know that online sales are the future. Of course, one can ask a question about profitability of such sales. Obviously, online sales is more profitable for us. The costs are lower, and at the same time, the scale in e-commerce makes the profitability of this business between 50% and, well, more than 50% higher than the profitability of ordinary brick-and-mortar shops. But when we talk about e-commerce, we are not thinking about online shops alone. It is important for us to combine, to merge those two distribution channels. Online seems to dominate now, maybe not necessarily for purchases as such, but on smartphones, people just look at the products and then they go to shops to physically look at those products. Online sales, yes, but people want to have some sort of contact with a physical product. That is important for us because we want to combine those two channels. It works very well, very smoothly if you have two distribution channels. The players that previously were strictly online sellers started to open their brick-and-mortar POSs because this strategy of merging those two distribution channels seems to be the strategy for the future. And another question about planned extension of terms of payment. How do you want to encourage your suppliers to accept higher terms of payments? Will there be any higher costs involved in this? Well, we have been encouraging our suppliers to accept that for quite some time now because we give them something in return. In this area, we cooperate with two banks, with two global banks, which provide the so-called platforms for financing of trade. Thanks to those platforms, we're able to extend the terms of payment, and on the other hand, the supplier for whom the terms of payment were extended is able, using this bank platform, able to discount the invoice, the payment earlier. They, well, to simplify things, the supplier sells this invoice to a bank. The bank offers very low interest rates because it is interest rate at the level of LPP standing. Thanks to our good standing, the bank is able to accept the risk and to offer low interest rate on the discount. That encourages the suppliers very much to use the platform. We see there is much demand for this kind of financing among our suppliers. Thanks to those bank platforms, we're able to extend terms of payment, and for us as LPP, that does not generate any extra cost. A question from our online listeners. Are you still planning to sell online through your own shops, or are you planning to enter multi-brand platforms? Online, we will sell our products only in our online shops. We do not plan to enter the platforms of any other companies. We want to have full control over how our products are distributed, what our pricing policy is, the manner of presentation of our products. We want to have full control on the visual presentation policy of our products. That is why we are reluctant to enter multi-product platforms. And also another factor is that those platforms are expensive, so we would have to give away a major part of our margin to this operator of the platform. That is why we decided to say, no, we will just build our own online shops and only by organic development. Hence, we do not plan cooperation with other entities like that. Okay, then. There are no further questions? No, there is another question. In the context of significant weakening of the dollar as compared to PLN, do you think that this margin at 52-53% is not too low? Well, this low exchange rate, US dollar to PLN, will help us to achieve the target. As of today, we do not want to change this target. Let's keep in mind that usually it is the fourth quarter that brings the highest turnover, the highest margin. Let's stick to the existing target at the moment. Let's be conservative. If things are better, that is better for the company. But as of today, we do not change anything in our targets. Thank you very much for your attention, for being here. I would like to thank all those who are watching us online. Thank you for your attention, and I invite you to come next quarter.